Hello and welcome back to Core Finance with Next Exchange. I'm joined by Andy Hasoon, Chairman and Strategy Director of Milamber Ventures PLC. It's not your first time on the show, but for our viewers, can you just give us a brief overview of your company and we'll crack on with some questions.
Sure, thanks Matt. So Milamber is an incubator, a growth accelerator. We work with media, technology and education companies, big focus on education, to help them through their growth journey. And we've got three levels to the business. We start off with an advisory business, so we get under the bonnet, understand what the business is doing, get to grips with the finances, who their customers are, and then we help accelerate that growth by putting in place strategic partnerships. And we focus on business development first, funding second. We then move up a level and we then take a minority equity stake in the company, which gives us a good IRR return from an investor perspective. And we've now got about 20 companies in the portfolio. We also do media and tech. The reason we do media is because media is about passing on messages and communication. And if you think about education, it's about getting the message into your brain. So if you read something, you return 10% 2 weeks later. But if you play, share, or do something, you retain 70 to 90% 2 weeks later, which is a big difference.
Incredible.
Especially when you're talking about hundreds of thousands of people like you do in organizations. The largest organization in the world is actually the Red Cross. And they have 15 million employees and around 100 million helpers. So how do you communicate to that many people on scale and get across those messages? So that's an interesting challenge. And then of course tech is at the heart of everything. We're looking at things from, old style tech, taking CBT, computer-based training, or CD-ROM training and putting it into animated formats. We're working on blockchain because content is a big issue of the future. Working on robotics and AI because teachers potentially could be a robot with an AI app in it so that they learn from you as you learn from them. And then the last bit is that if we like the business and we think the business has potential, then we buy it 100%, which of course gives us the best IRR return. And what we're trying to create eventually is a sort of WPP, but for education. And that's very much our ethos. So our purpose is to globally innovate education, but as a business, we're trying to create a WPP for education. And we've done that with Next. We're on the Next exchange. We're probably the smallest company there, but we're growing very quickly now because we're in the negotiations on about 5 or 6 acquisitions. We have some very senior people who've joined the organization, got a lot of experience. They've got very good backgrounds from universities and things like MIT, Harvard, Cambridge, Judge, or Said. And what we're now doing is allocating projects to each of these individuals. They're taking them on so that we're actually running multiple deals in parallel. And over the next 6 months, you'll find that we're starting to announce some of those acquisitions, which of course step change the business every deal that you do.
So you're a listed company, listed on the Next Exchange, as you say. What do you bring to investors? Investors could, in theory, go out and find these separate companies and say, look, I'll take a stake in this. Let's do some crowdfunding. Let's get involved. What do you bring to investors? Why should investors buy your shares instead of actually searching out these separate companies? What's the difference?
So let's deal with the market reality. 70 to 80% of companies in the first 5 years fail organically. If they're VC backed, that is higher. 80 to 90% fail if they've got a VC backed business. Why? Well, they fail for 3 reasons. The first is they don't have a product that's actually needed in the marketplace. 42% fail because
there's no niche there. That's going to fail regardless of what you try and do with it.
And secondly, they haven't developed the product with a customer base in mind. So the next reason for failure is they've got the wrong business model or the wrong capital structure. The funding model is wrong. The commercials are wrong. And then the last thing is they've got the wrong people. So we actually have experts in different parts of the business. One of our guys used to work with Sir Martin Sorrell at WPP. He's the marketing guy. One of our guys was one of the top techies. He's built 3 telcos. He's run software development houses. He does all the techie bits. We've got a fantastic CFO who's, from Cambridge. He's worked in all the sort of big banks, JP Morgan, Kleinworks, whatever, at UBS. And he's now putting in financial disciplines and modeling to help those companies. So what you've got is you've got a team with very cool disciplines and a lot of experience, relationships, and we help the companies that we work with through their growth journey. And we do that in detail. We work on a blueprint. We actually map out the business on a page. So you're explaining very eloquently and simply, what is the elevator pitch? We always force our entrepreneurs to say, you've got to get it in 30 seconds, because that's how much attention people will give you when you're walking in a conference or in an elevator. And the next thing is it's your go-to-market. What is your go-to-market strategy for these products? How do you get scale? How do you get big corporates to buy or government to buy? And then how do you create an anchor tenant customer base which you can then build upon? And of course, it's looking at the business model and saying, is this the right business model for this product? Is it a direct sales model, a distribution model? And again, we've got relationships with some of the big media partners to put in place big distribution relationships. So let me give you an example. We started working with a company in April. It did vocational training training in the health, social, and teaching assistant sector. In May, we got them qualified as an apprenticeship levy company. Over the summer, we've helped them, go and secure new business under the levy customers. Now, this was an 800,000 turnover business in April. In just July and August, we secured £1.5 million of new business and another million in September. So in 3 months, you've done £2.5 million of new business. That's driving a massive growth on the company. And we're now looking at how do we take that company to the next level. So that's how we work with people.
Do you see in your portfolio, do you see synergies? Can you look at a company and say, actually, it would be better if we marry these two together, and you're looking at kind of merging these companies? Is that part of your strategy?
Absolutely, at the PLC level. So when we're working with education companies in particular, we have a strategic plan of where we want to get to 5-10 years from now. And we're looking to, we've identified 40 capabilities that are needed in the education space if you're to provide a total solution for education. And each one of those capabilities is a potential acquisition target. And we've started now building those. We've got 3 deals here and 3 deals in the US as well, because we've got a team over there. And we're now in what we would call very detailed due diligence. We like to take a stake in the business, really get to know it, and then as we move from that stage to the acquisition, we go from a supporting role to a leading role, where we then drive the company's growth through the mechanisms that we've talked about earlier.
And you talked about the strategy of these, certainly the PLC companies. What is your strategy, and what is your plan for, let's say, the next 12 months, maybe even looking out to 5 years?
Yeah, so we actually have a very strategic plan, in that if you look at education, it takes 5 to 10 years to build a solid education business. But to influence change and innovation in education will take 15 to 20 years. Now, a number of years ago, I was at Saïd Business School, and I met a gentleman called Elon Musk, which we all know.
Yes.
And he had just at that point in time sold PayPal. And he was sitting on about $1.5 billion of cash in his pocket. And I'm sitting there with a panel, and we're just having a chat. And I said, look, Elon, you've just made a lot of money. What are you doing next? What's the goal? You're 29 years old. What's your objective? And he said, well, I'm thinking space and cars. And I said, cool, I like space, James Bond, Draco. But it was also one of those businesses that you knew needed 50 years to make a difference.
Yes.
Now, the reality is he's done both, SpaceX and Tesla. The reality is that as we grow up as business people and we become more experienced and we build a network of people around us who map our strengths and weaknesses. I'm strong on certain things, but I'm weak at others. I bring in a CFO who's very weak, strong on numbers, where I can communicate. So, you build a team that's very complementary, and therefore you guys can then take these businesses to the next level. So our strategy is about building an army. building an army of advocates about education who can invest in a vehicle. You know, we know education, and you go to a lot of the funders in this city, and they will tell you that they like education, but they don't understand it because it's highly complex. There's different markets: primary, secondary, vocational, higher education, corporate, lifelong. These are all different markets, and the procurement systems are very different. Trying to sell a product to the 18,700 primary schools is like selling treacle. First of all, it's a board of governors that are parents. Secondly, the teachers have no time. They're dealing with administration, and they have no budget. So how do you sell a new product into a primary school? It's hard. And you can do that a number of ways, and we have experience of doing that. And we have relationships with Pearson, Scholastic, you know, other organisations that have the distribution capabilities to get in there. But those have been built over time. You know, you go to Ingram in the US, and they get 40 companies approaching them every month. What happens when we bring a product is our reputation gets us to jump the queue, to be able to look at it, but we can only do that a few times if we don't deliver good value to them as well as to the company that we're working with. So it's about triaging, finding the good opportunities, making sure they have capabilities to deliver the value that is being promised, and then it's about execution. It's about making stuff and operationalizing it so that you can build, scale, and grow.
Brilliant. Well, Andy, you sound very passionate about that. Good luck over the next 12 months, 5 years. But in the meantime, thank you so much for coming in today. Check out the stock, Milamber Ventures PLC, on the next exchange. Thank you, Andy.
Thank you, Matt.